I only wear headphones for two reasons. Number one, watching porn when I was a kid in my mom's house. And number two, to make fun of other adults' trading strategies. You guys know why I'm wearing the headphones. You read the title, you saw the thumbnail, you clicked the link because this is a popular video sometimes. I haven't done one in a little while because sometimes people get a little bit salty at me. But who cares? I saw something so ridiculous that I had to make a video on it. I have no idea what this is going to be. It's another strategy video, and it's from someone I didn't expect would make a video titled this. It's from Renner. He says that he has a strategy. Get out of my fucking pocket, phone. God damn it. That's going to have a 88.89% win rate. That phone is just buzzing off the hook. Get out with all of your money deals and fast cars and women texting me. You guys know what it's like to be a professional Forex trader. Maybe you don't. I don't know. Anyways, guys, this is something that I just had to review and make fun of because I don't know anybody that can hit this percent win rate, even with low R trades. Some of the best traders I know in the world. I actually know amazing traders, much better than myself, and they're not hitting over 80% with their trades. They're hitting a little bit lower. 80% is about the pinnacle that I have actually seen. So to claim 88% chance, I'm thinking this is something that's going to blow your account quite quickly. Let that be a warning to you guys very quickly. I have my hopes up high, however, because this could change the lives of, how many subscribers he has? 700,000 subscribers. Change the lives of 700,000 subscribers and then just ruin the Forex market. And then the strategy would also be ruined because everyone would be trading this way. Let's jump into it, guys. That's 2 minutes of me talking already. Let's just look at the strategy.
Hey, what's up, my friend?
Hey, what's up, Brandon?
Training, right? I'll share with you a specific trading strategy, right, that has a 88.89% winning rate. I'll give you the exact trading rules,
that's crazy.
The performance matrix of this strategy, examples of it, and much more. So with that said, let's get started. First and foremost, right, what is this trading strategy about and why it works, right? So before we get started, I want to say that Larry Connors, right, he is the person that I learned from. So credits to Larry Connors, because without him, right, today's trading won't even be available for you to watch, because the idea, the concept, the strategy, I learned it from him. Okay, so the core idea, right, behind this trading strategy is that it's a pullback stock trading strategy. And here's the thing, right, why is that, right? Because in the long run, you know that the stock market, it's in a long-term uptrend. Why? The reason...
Wait, I thought he was a Forex trader. Why is he talking about stocks? I guess it doesn't make much of a difference, but let's apply this to Forex trading and see how it applies.
Because the stock market tracks what the economy is doing. The reason why the US stock market has been in a long-term uptrend since 1900s is because the economy in the US in 1900s compared to today has improved so much, right, over the last 100 years or so. Same thing for the Singapore stock markets, same thing for the China stock markets, right? Most stock markets out there, they are in a long-term uptrend because today...
Oh my god, I got clickbaited into making another video because I know what this is already. This is simply a buy the trend stock market, wait till you get filled with your take profit type trading strategy. It's just assuming that the stock market's not going to crash and just keep holding it until you're making money, which is essentially what you should be doing as a stock trader.
Today's economy is much better than where we were like 50 years ago, 100 years ago. Okay, but here's the thing, just because a market is in a long-term uptrend doesn't mean that it goes up in one straight line. That isn't how it works, right? Because as you know, a market could be in an uptrend, but it has a series of higher highs and higher lows. And in the short run, right, because of panic selling, because of profit taking, because of fear in the market, right, the prices, right, in the market could go below its true valuation. Okay, so this means, right, that there exists, right, profitable trading opportunities, right, for traders like us to take advantage of. And this is what today's trading strategy is all about. We are looking to identify pullback in the stock markets. We are looking to identify fear in the markets. We are looking for the market to,
Yeah, so essentially, it's just going to be some sort of pullback based trading, and we're just going to be only buying up. This isn't really trading. In my thoughts, this is just investing for short periods of time. It's not really a trading strategy, but I'm interested in seeing what the actual trading requirements are for entry. Let's see if it makes much sense.
To have a sell-off, right? Then we enter on the pullback, and hopefully we are able to profit, right, when the market makes the next swing up higher. So these are the rules, right, of this trading strategy. We are trading on the S&P 500 market. You can do it on the ETF, you can do it on the futures. It's up to you. Even if you want to, you can test it on your own local stock markets. You can test it on the Russell 1000. You can test it on Nasdaq. I leave it to you. Okay. Again, first and foremost, we want to be trading, right, when the overall market is in an uptrend. So our way to define the trend is that the S&P 500 must be above the 200-day moving average. So you just pull out your 200-day moving average. If the S&P 500 is above it, great. Now we have permission, right, to trade, right? If not, we will remain in cash. Our entry, this is very straightforward, right? Our entry is also otherwise known as the defining the depth of the pullback. We want the 10-period RSI to be below 30. Okay, so this is how we define our so-called trading setup, right? Our entry point. The 10-period RSI must be below 30. Once it's below 30, what we're going to do is that when the market opens the next day, we'll just simply enter using a market order. Right? Whatever price it is, we'll enter on market order.
Okay.
Our exit, very straightforward as well. We are looking to exit, right, when the 10-period RSI has crossed above 40 or after 10 trading days, right? Because sometimes the 10-period RSI can be below 40 for quite a number of days or weeks, especially during recession.
Wait, why? So he's entering below 30, but he's only selling above 40. Seems a little bit off. He should be actually extending that a little bit longer. If the stock market truly is going in an uptrend, then we should really be able to see more of a RSI peak. Just knowing how the RSI works a little bit.
So this is where we have a time stop, right? If after 10 trading days, the market, or rather the 10-period RSI has not crossed above 40, we'll also manually exit the trade, okay? But if the 10-period RSI has crossed above 40, then we'll simply sell it on the next day's open. Make sense?
Makes sense.
So let's have a look at a few examples, shall we? So if you look at this chart, what I've shared with you over here is just simply the chart of the S&P 500. This is the futures market chart. So let's have a look at how this trading setup looks like. So you can see this black line over here. We have is the 200-day moving average. This black line here. So the S&P 500 is above it. That's the first criteria. Second criteria we need is for the 10-period RSI to go below 30. So I've pulled out the 10-period RSI so you can reference it easily over here, 10-period RSI. And you can see over here, right now the RSI value is 19. So this has met our criteria because if you recall, the 10-period RSI must be below 30. So when the market closes today, right, RSI now is trading at 19. So our setup is met. We are going to enter on the next day's open. So when the market open the next day, okay, we will simply go long over here. Okay. So what's the exit criteria? It is when the 10-period RSI crosses above 40 or after 10 trading days. So you can see on the next day, RSI has now crossed above 40.
Wait. So the exit requirements, he has a take profit exit requirement and he has a time-based exit requirement. He has no loss-based exit requirement. Ooh, baby. Uh-oh. So he could potentially just continue dumping for 10 days and then exit at a massive loss. I will definitely be looking at some backtesting results on this one to see.
Here, okay, not exactly the next day, but 2 days later, RSI has crossed above 40, closed at 48. So we'll exit on the next day open, which is on this candle here. We exit on this candle open. So you can imagine, right, for this setup, your entry point is here. You buy here and you sell here, just capturing this kind of like this one swing up higher, this one swing. Okay, let's have a look at another trading setup. So this time around again, the rules are the same, right? Looking to buy when RSI is below 30. So we have it over here again. Look at this. At this point on today, S&P is still above the 200-day moving average. So the overall trend is still towards the upside. Look at the RSI now. The value is 28. So we have the setup, right, is met, right, because the 10 period RSI is below 30. So what we'll do is we enter on the next day open. So next day market open here. So we go long on the next day open. Our exit is after 10 trading days or when the 10 period RSI has crossed above 40. So in this case, here it has now crossed above 40. So we exit on the next day.
Yeah, you guys really notice it. It only really takes a day or two. That's probably going to be the trend here. And you're really only making very, very small moves. Like you're basically jumping in on a massive downswing, right? And then you look for a quick bounce and then you get out really quick. That's basically the gist of the trade. Now, what if it doesn't come up to 40 and then just gives a dead cat bounce, like, throwing a dead cat on the ground, see how that bounces, right? And then it just keeps dumping for the next 10 days. Then you've completely blown your entire account. I'm very interested jumping into
open,
this.
Which is somewhere here. So we can see we enter here, exit here. So thereby just capturing this
very
this
little
small swing up higher.
You
so this
basically
is pretty much
make
how
nothing.
this trading strategy works, right? And again, I know this is just some simple chart examples, but so let me share with you the matrix, right, of how this trading strategy has performed. So many of you have asked me, right, what platform I use to do the backtesting. So this one is this platform is called Army Broker, right? You can see that these are the results, right, from 1996, right, all the way to 2019, which is the duration of the backtest from 1996 to 2019, about 14 years of data.
What? Look at this. 1996. And you're getting, what, one trade a year? Oh man. Oh my God. I wonder if you can use this on a lower time frame. That's probably what I'll backtest, because if this is actually backtesting the S&P, you're trading maybe once a year. No.
These are the result, right, of every trade, right, that the trading strategy has taken.
Okay, so here's the thing. If you're trading like once a year, and these are all of the results, what you're going to be incentivized to do is basically risk massive amounts. Let's say you have a 90% win rate, roughly, right? So each year, you're probably going to risk, 50% of your account, right? Because 90% chance you're gonna make, you're gonna make a big profit there, right? But then we realize that after 10 years, boom, you've just blown all of your retirement savings. So unless you do this and you risk very little, maybe 10% would be little if you're only trading once a year. Then you're honestly making nothing because you're only trading once a year, and it still works better than the S&P because you might make 20% in a year instead of just investing and making that flat 10%. But if you're risking 10% really in one trade and you're only trading once a year, you might as well just invest in the S&P blindly and make that 10% just off of investments rather than trading and wasting your time. So this is, to me, doesn't make any sense at all. You could just invest and make the exact same amount of money, is what I'm roughly guessing. I don't know for sure, but we can see.
So if you want to look at the numbers which you can digest easily, okay, this is the Excel spreadsheet table that I've exported. You can see that over the 14 years, we have about 36 trades. Our winning rate over here is 88.89%, as I mentioned earlier. And the average gain, right, per trade, right, average profit per trade is about 1.43%. And your average loss, right, on each trade is about negative 0.87%. So overall, right, this is a it seems like something that will give you an edge in the markets. Okay, however, there is.
So this is the caveat here. It does say the losses are smaller. It's just chance at this point. When you have such a small sample size, you have 30 trades, 36 trades. The sample size is negligible. So this is something that without any solid stop parameters, you can't trade like this. Unless we jump this down to a lower time frame, that's what I'm going to jump down to. I'm going to try this on the 1 hour or something and see if we can get any data that will actually support this. You could just have a bad year all of a sudden and then completely blow your account.
a downside to this, and I'll explain this shortly. So moving on, right? How can you apply this to your trading, right? So first lesson is this, right? You want to look for buying opportunities, right? After a strong pullback in the stock market. So when you see the stock market makes a strong pullback, right? The thought process that you have, right, especially if it's still above the 200-day moving average, is that where can I look for buying opportunities? Maybe a pullback towards, like for example, the 10-period RSI is below 30. If you're a discretionary trader, you can use tools like candlestick patterns, support, trend line, right, to help you better time your entry, right? That's one way you can go about doing it. And one thing to point out is that you want to avoid shorting the stock market, especially I know it's tempting, wow, strong bearish momentum in the stock markets, right? It's time to sell, it's time to short the market is going to collapse. But here's the thing, right? Based on historical testing, right, more often than not, the price, right, tends to reverse back up higher. So as much as possible, right, you want to avoid shorting the stock markets, especially, right, if it's still above the 200-day moving average. Make sense? And the second thing is this, right? So as mentioned earlier, I said that, all this together
All right, guys.
will be 12.90.
He's wrapping up here. That's basically all for the strategy. What I'm going to do is I'm going to jump in and I'm going to try to collect a little bit of data here looking back. I'm going to look at the 4-hour, I think, because then we might be able to see maybe one trade a month or something like this instead of, what was it, 2 a year, 1 a year, something like that. And then we'll see if there's actually any stronger amount of data that can support this to be true. All right, guys, so I'm just going to show you kind of how I'm doing this on my own chart here, so you can kind of see to see if it's actually working here. So I did put the RSI as 10, and this is a 200 moving average, and we're just going to look for those crosses. So this is below 30. Yeah, that's 30. Below 30 right here, right? So very, very first one I'm looking at, we see 10 candles next. 1, 2, 3, 4, 5, 6, 7, 8, 9. Roughly around here. We'll just go roughly. You'd enter here to here. You're on a loss. There you go. So not a big loss, but a 0.9% loss there. So let's move on. So again, below 30, and your winning amount at 40 would be here. So you've then made a 0.15% win. So we're just going to look at a few just kind of quickly, just so that I can get a little bit of data. So right away I can see, guys, I'm seeing like a lot of, at least on the 4-hour here, I'm seeing a lot of like entries that just basically are breaking even or losing or winning a little bit. Definitely this is, I've looked relatively quickly and I haven't collected solid data, but it's not a winning strategy, and it's got about a 50% win rate using this. So it seems absolutely ridiculous on the 4-hour. So we'll just check the daily really quick here to see if the daily makes any more sense, to see how often this actually happens. So we have, we have one winner here, just to see if it actually is a really, really high win rate, to see if he's actually lying about that data. But I trust him. I just want to make sure. So that would have been a winner. This one here would have been a loser. So that's 50% right there. We have a low right here, probably a winner. Right here would have been a winner. So the daily does seem to be looking a lot better. That's below the lows there, below the moving average. Below the moving average, isn't it? Right here, though, would have been a winner. So the daily looks way, way better. The only thing I'm really worried about is that there's just going to be a year that's just going to plummet. And then you're going to completely blow your account because there's no stop out range. And that's the major problem here, guys. So I really do not recommend this strategy as clickbaity as it was, a 90% win rate. It's only on the daily time frame, and you're going to make 1 or 2 trades a year and then risk the possible chance of completely blowing your account because you don't actually know how to manage your risk properly. Anyways, guys, I hope that was insulting enough to this strategy. If you guys like the content, if you guys want to watch actually how people trade Forex instead of trading some ridiculous Forex stock trading strategy, then you guys can hit the subscribe button. I stream on most weekdays, so you guys can watch my trades and figure out for yourself how to trade like a professional Forex trader. I am trading out of the comfort of my own home, and I do this for fun. See you guys next time.
Listen.